Hey folks, here's another sample Camtasia problem for a new business that does not have any beginning balances. I made this one a little bit shorter than I did the one with beginning balances just because it took so long to get that one done. Okay, so what we're going to do is we're going to have the transactions, we're going to analyze them, we're going to make journal entries, and so here are all the journal entries. I'm going to post those journal entries to T accounts. From the T accounts, we're going to prepare financial statements and keep it just as simple as we can. Okay, so if there are no beginning balances, then the T accounts will have nothing. And I did not set these up according to the accounting equation. I probably should have. Instead, they're set up with assets going across, liabilities second, and then all of your equity accounts below. I like the setting it up according to the accounting equation a little bit better, though. So in the future, that's what I'll do. Okay, so transaction number 1, stockholders invested $10,000 cash in the business in exchange for common stock. So we're going to debit cash and credit common stock, $10,000. So I'm going to post, I'll go ahead and post it to the T account right now. We're going to debit cash and credit common stock, $10,000. And I noticed that my posting reference is journal entry number 1, and this is journal entry number 1. Okay. Journal entry number 2, we paid $400 cash for office rent in April. And I think we're going to be in April, apparently. Debit rent expense, credit cash for $400. So go to the T account. And I'm going to debit rent expense for $400 and credit cash for $400. Number 3, we're going to purchase office equipment for $2,500 in cash. So I'm going to have an account called office equipment and debit it for $2,500 and credit cash $2,500. So put in some office equipment with a debit, $2,500, credit cash $2,500. Number 4, we incurred $300 of advertising costs in the Chicago Tribune on account. So I didn't pay for it yet, so we credit accounts payable. We incurred the cost, so we debit the advertising expense for $300. Right, debit to advertising expense $300, and we haven't paid for it, so number 4, we're going to credit accounts payable. $300, I guess. I guess those were both $300. Let me double check. Yeah, $300. Okay, number 5, we're paying $600 cash for office supplies. So it's going to go into an asset account, office supply inventory $600, credit cash $600 because we paid cash for it. So we're going to debit office supplies for $600. And we are going to credit cash $600. Number 6, we earned $9,500 for services provided. $3,000 is cash received immediately from customers, and the balance of $6,500 is going to be billed to the customers on account, which means we have to set up an accounts receivable. So debit cash, the $3,000 we received, debit accounts receivable, the $6,500 we have not received, and credit the revenue of the $9,500 that we earned. Okay, cash, accounts receivable, and revenue, number 6. So we're going to debit cash, $3,000. We're going to debit accounts receivable, $6,500. And we are going to credit revenue, the full $9,500 that we earned. Number 7, declared and paid a $200 cash dividend. So debit the dividend account, credit cash, $200. That's number 7. Dividend is a debit for $200. And cash is credited for $200. Number 8, we paid the Chicago Tribune, it looks like I have a typo in there, the amount due in transaction number 4. So if we refer up here to number 4, we incurred $300, and so now we're paying the whole thing. We put it into accounts payable, so I want to take it out of accounts payable, and I'm paying it, so I'm writing a check, so I'm going to decrease cash with a credit for $300. All right, accounts payable right here. I paid $300 with cash, $300. Number 9, we paid employee salaries of $2,200. So we'll debit salary expense and credit cash for $2,200. Salary expense is a debit for $2,200 and cash is credited for $2,200. And I believe that takes, no, one more. Number 10, we received $4,000 in cash from customers that were billed in transaction number 6. Okay, so we billed them for $6,500 and they're paying $4,000. So I'm going to decrease the accounts receivable by the $4,000. Remember, we put in $6,500. Now the customers have paid $4,000 of it. And so we've got to show that we received the cash and debit it for $4,000. So debit cash, whoops, right here, $4,000, and credit accounts receivable, $4,000. Whoops, right there. Okay, so we made all the journal entries. We have posted to the T accounts, so now we need to come up with the balances. Add up your debits. Total debits in cash are $17,000. Total credits are $6,200. The debits are more. The difference, $10,800 is the balance. That will go forward to become cash on the balance sheet of $10,800. And you can always, I put it in there. I didn't tie it to it. Okay. You can either tie it to it or you can just put the amount in there. But anyway, the numbers on the financial statements come from the balances in the T accounts. Okay, the order that we prepare financial statements, we do the income statement first, then we do retained earnings statement, then we do balance sheet. All right, notice that you have a 3-line heading, the name of the company, the name of the statement, and the time period that you're looking at. Income statement, this is going to be for the month ended. So this is for the month of April, basically. Retained earnings is for a period of time, the month ended. And the balance sheet is as of, because you have cash on it. The cash on May 1st may not be $10,800, and the cash that you had on April 29th may not be $10,800. So the balance sheet has cash. That is it. It is as of that date. So trial balance has cash, balance sheet has cash. They're both as of dates. Retained earnings statement and income statement are for a period of time dates. Okay, so we only pick up revenues and expenses for the income statement. And our revenue, if we go over to our T account, we'll see that the revenue account has a balance of $9,500. And our expenses, we have a $300, a $400, and a $2,200. So 3, 4, and 22, total $2,900. And net income then is $6,600. Okay, 2 things to note. These are not debit credit columns. They're simply columns of numbers to add and subtract. So you're adding the 3, 4, and 22 to get the total of $2,900. $2,900 is subtracted from $9,500 to get $6,600. You're going to have a dollar sign on the $9,500, the $300, and the $6,600 only. Okay, you got to pay attention to all those little details. I highly recommend when you're looking at any kind of a chart, a journal entry, financial statements, whatever it is you're doing, I want you to understand how it all fits together. I want you to know that you add these three and they total this number. I want you to know that you're going to subtract the total expenses from the total revenues to come up with your net income. I also want you to know that the net income flows forward and becomes part of the retained earnings statement. Okay, so we've got the three-line heading. The beginning balance of retained earnings is 0 because this is a brand new company we're starting up. Add the net income from the income statement. Subtract the dividends from the T account. And we have an ending balance of $6,400. So you could date this April 1 of 11, and you could date this April 30th of 11. Okay, the ending balance of retained earnings will flow forward to be the ending balance of retained earnings on your balance sheet. So add up your assets to get total assets of $16,400. The liabilities are non-existent because we paid off our advertising liability we had. We have common stock and equity that are added together to get the $16,400. And our total assets equal total liabilities and equity. Everything balances. We're in good shape. Dollar signs, 10,800, 16,400, 10,000, 16,400. Okay, that was a little bit simpler, a little less complex of a problem. You need to make sure you know all of the journal entries that you would make for the transactions in this sample problem and in the other sample problem for Chapter 2 that had with beginning balances. Okie doke. Thank you guys. I hope this is helpful. Let me know if it's is or isn't. I'd be glad to hear some feedback from you. And my skin is thick, so I can handle if it's negative. Okay, bye.